And joining me now with more is Mark Giambrone, Executive Director, Head of U.S. Equities and Portfolio Manager at Barrow, Hanley Global Investors. Thank you so much for joining. And we'll start by asking, Mark, in terms of what the latest data is indicating to you about the path forward.
Well, there's quite a bit of mixed data at the moment and a lot of uncertainty in the market. I do think the earnings that we're getting are stronger than people expected, and certainly coming out of Microsoft specifically last night, it's giving a little bit of a relief to the market at the moment. And while the earnings are still good, the path forward is still uncertain related to how companies are handling tariffs, what might happen with the tax bill, et cetera. But to this point, good management teams are now laying out strategies around how they'll deal with the tariff impacts. And I think the market is breathing a sigh of relief around that.
A lot of the earnings that we're getting, obviously, are for the previous quarter, right? Not necessarily ones that would have been impacted, for instance, by, of course, the latest tariff rollout by the president, steeper tariffs than expected, more wide-reaching on that April 2nd deadline. How does this impact forecasts going forward as companies do readjust their strategies?
I think that's an excellent point. I think this may be a quarter where the look back means very little and the look forward means much more. And so as companies come through with scenario analysis or discussions around how tariffs are impacting their business more specifically, again, it allows the market and stock pickers like myself to then be able to push that into our analysis and think about where the stocks are currently trading relative to those scenarios. And there's quite a bit of value in the market at the moment around that. So the look forward is really important, and some guidance is helpful. So we'll see as things change. I do believe at the moment the expectations are for the tariffs, or at least the level of tariffs that are in place, to be as extreme as they'll be. With some hope now we'll see some tariff or some negotiations happen and come through with some changes in those tariffs and probably bringing them down over time. I think that will also be reflected or met well by the market.
Where do you see opportunity in this market? Looking at the S&P 500, at least yesterday, closing down about 9% from its record high.
I think you have to really bifurcate the market almost by size and then by sector. And so where we're seeing the most value in the market is in the bottom portions of the market cap spectrum of the market. So the top quintile of the market by market cap is still relatively expensive. But as you move down quintiles, we are finding significantly more value specifically in those areas. And then I would say the cyclical areas of the market have been hit really hard. A concern around recession, a concern around tariffs, whether it's consumer discretionary or industrials or materials. Those portions of the market, granted, frankly, they are more cyclical, therefore will be hit harder by some of these things, especially if there's a recession as we move forward. But that's clearly where the value is at the moment. And sifting through and kind of trying to find the diamond in the rough here is what we're doing.
Interesting. A diamond in the rough. What does this mean, not only for U.S. equities, but international equities, Mark?
We really entered this year with the U.S. relative to international equities at a pretty steep differential. So non-U.S. stocks were very inexpensive, relatively speaking, versus the U.S. I think you've seen some of that correcting throughout this year. So, of course, as the head of U.S. equities, I think the U.S. market is an excellent market and there's lots of value. But there was clearly an argument to be made, and that's starting to happen, where we're seeing some dollars shift overseas and those valuation levels being very attractive to some investors.
Interesting. Now, when it comes to the path forward for here, Mark, is a recession something that you are considering a possibility?
I think you have to consider it a possibility. Keep in mind that a recession is not the end of the world, nor is it the end of the market. It simply means we're going to have 2 quarters of down GDP in a row. And really within a recessionary environment, there are lots of ways to make good investments as we move through that environment and then obviously back through the other side. So if my biggest concern, and we meet with company managements all the time, is the overhang of tariffs, no budget, no tax bill at the moment. It's forcing CEOs, capital allocators, et cetera, to be frozen at the moment. And being frozen is a big negative for the market. So no new factories, no new hiring, no new projects. Those are the kind of things that can have long-lasting impacts. So the longer we go without any relief on the tariff side, the longer we go without a tax bill or a budget, the more people will be frozen in place. And that can lead to multiple quarters of no activity. Once we get through that, however, I think you'll see activity pick back up. So it will be a short-lived, shallow recession in my mind if it comes, and it's still an okay place to allocate capital within the market.
All right, Mark Giambrone, he's the Executive Director and Head of U.S. Equities and Portfolio Manager at Barrow, Hanley Global Investors. Mark, thank you.
Thank you.